It's no news that recent macroeconomic factors have compelled central banks of several countries to abruptly raise interest rates and tighten liquidity as an approach to tackle inflation. This, of course, was done to encourage investment and discourage spending as much as possible. Now, what this implies for you is that you can make the best of earnings through investment today. Specifically, investment in dividend-generating sources could serve as an income-generating avenue to cushion the losses on your investment portfolio. In this video, I'll be discussing with you 6 dividend stocks you can buy to generate income of up to $1,000 passively. Hi everyone, this is Ebuka and this is the Finance Wiz channel. For those on this channel for the first time, Finance Wiz focuses majorly on topics around income generation, savings and investments, debt management, retirement planning, and overall financial freedom for you. As such, if you find these topics very interesting and important to you, ensure to like, share with friends, and subscribe to this channel so you don't miss any of the gems in subsequent videos. And of course, I want to encourage you to go back to my previous videos and watch them so you can gain even more value from this channel. So I've specifically selected these 6 dividend stocks based on 4 major factors. The first is that they at least have dividend yields of 2.5% and upwards, which is my basic benchmark for selecting dividend stocks. The second factor is that they have consistently paid dividend over the last 5 years. The third factor is that these stocks have decent earnings and growth performance over time. So the fourth and most important factor is that these are established businesses which have great potentials to expand even into the long term. So something I want to remind you about selecting dividend stock, which I've always said in my previous video, is that you should not solely focus on dividend criteria such as dividend yield, the actual dividend paid, when making your decision on stocks to buy. You should consider other factors such as the earnings potentials, the performance of the business, liquidity of the business, and many other criteria which we have talked about in previous videos. I've tagged the video here where you can see factors to consider when you want to make your stock selection or purchase. So let's get into the details of these 6 dividend stocks I'll be talking about in this video. So number 6 on my list is what I call National Storage Affiliate Trust, with the ticker symbol NSA. So NSA is a real estate investment trust with its headquarters in Colorado, United States. So its business model specifically focuses on ownership, operation, and acquisition of self-storage facilities in the US. So as of June 2023, the company held ownership in 1,117 storage facilities located in 42 states including Puerto Rico, with approximately 72.8 million rentable properties. NSA is one of the largest owner and operator of self-storage properties among public and private companies in the United States today. Now let's get into the details and analysis of NSA's financials. As you can see from my screen, NSA currently trades at $34.84, which in the last 1 year is a decline of about 25.43%. It currently has a market capitalization of 3.11 billion USD, and when we scroll down to the financials on a high level basis, you can see that in 5 years from 2018 to 2022, the revenue has grown from 329.47 million to about $809.31 million, which accounts for about 145.6% growth. You can also see that the net income has grown from 14.11 million to about 103.74 million. Now this accounts for 635.29% increase in 5 years. Now when we go into Yahoo Finance, we can see even more details about the statistics of this stock. Now you can see, of course, the enterprise value is 7.07 billion. Now PE stands for price earning ratio. Now the price earnings ratio reflects what the expectations of shareholders would be about the stock in the future. In other words, stocks with high PE ratio reflect higher growth potential in the long term. Now in this case, we can see that this is a 32.56 PE ratio as the that's the TTM, trailing 12 months. Now if you scroll a bit down, you can see the enterprise value to revenue, which is an 8.43 multiple. Also, if you want to assess the profitability of this business through the profit margin and operating margin, you can see a 13.21% and 38.60 returns, which means the business is profitable. If you also want to assess how well management has effectively utilized the assets in generating revenue, you can see also that the returns on assets on a TTM basis is 3.43% and 7.22%. Also, from a cash flow perspective, you can see that it has a lot of cash to spare, which is about 434.99 million. And I know most important to you is the dividends. Now we can see that the forward annual dividend is 6.47%, which means that for every $1,000 invested in this stock at the current share price, you should be getting about $64.7 on an annual basis. Finally, it has a dividend payout ratio of 206.54%, which means that the company is willing to pay as much of its earnings to you as the shareholder. Now, why do I specifically love this stock? It has actually paid an increased dividend over the last 8 years consistently. Overall, on a scale of 1 to 5, 1 being the lowest and 5 being the highest, I'll rate this stock a 4, which is a buy for me. So number 5 stock on my list is what I call Merck & Co. Incorporation with the ticker symbol MRK. Now, MRK is a multinational pharmaceutical company headquartered in New Jersey, United States. So MRK ranks as one of the top 5 largest pharmaceutical companies in the whole world by revenue. Now let's dive deep into the high-level analysis of this stock for your use. So as you can see, this stock currently trades on the New York Stock Exchange at the price of 107.52. Now it has significantly grown in the last 1 year by 22.57%. As you can see here. Now, it has a dividend yield of 2.72%. That's to say, for every $1,000 you invest, you should be getting $27.2 per annum. And it has a PE ratio of 88.23, which means that shareholders have a high expectation of this stock growth over time. It has a market capitalization of 272.83 billion USD. And if we go all the way down to the high-level financials, we can also see that its revenue has grown from 42.29 billion to about 59.28 billion, which represents a 5-year growth of 40.16%. Also, you can see that its net income has grown from 6.22 billion to about 14.52 billion in 5 years, which represents a 133% increase in 5 years. If you take a step further, you can see that it has a good cash and short-term investment, with its asset base growing from 82.64 billion to about 109.16 billion. You can also confirm that it has grown its free cash flow by 133.81% to $12.69 billion, which means there are enough funds to pay as dividend if need be. Now, if we look at Yahoo Finance to see more analysis on this stock, we can confirm that the enterprise is valued at $303 billion. It has a trailing PE ratio of 88.13. And of course, when you take a look at the profitability of this business, it is very profitable, sitting at 14.87% for its operating margin and 5.34% for its profit or net profit margin. Also, in terms of management effectiveness, you can see that it has a 5.12% return on assets for its trailing 12 months and a 7.61 returns on equity. So this business has paid dividend over 28 years, of which the last 13 years reflects a period when it successfully and consistently increased dividend payout on a regular basis. So overall, on a scale of 1 to 5, I'll rate this stock a 5, which means a strong buy for me. So the fourth stock for me is the Northwest Natural Holding Company with a ticker symbol NWN. Now, NWN operates in the regulated utilities industry with a business history of operating in for more than 116 years in the Pacific Northwest, and it has its headquarters in Oregon, United States. So NWN operates through 3 major segments. The first is what I call the Northwest Natural Gas Company, which basically provides natural gas distribution services to residential, commercial, industrial, and transportation customers across the US. So the second segment through which it operates is called the Northwest Natural Renewable Holdings, which focuses on renewables as a whole. The third and last segment is the Northwest Natural Water Company. So this business unit specifically provides water distribution and wastewater services. It also has investment in other business areas such as appliance retail centers, natural gas asset management services, and operation of mixed gas storage facilities, which is operated by third parties on their behalf. Now, if we take a deep dive into the analysis of this stock, we can see that it trades on the New York Stock Exchange at $41.22. And of course, this is a reduction in share price by 13.98% in the last 12 months. If you also look at other factors such as the market capitalization, which sits comfortably at 1.49 billion USD, and a PE ratio of 14.52%, which reflects that shareholders have a high expectation regarding the growth of this stock over time, and of course the dividend yield of 4.71%, representing $47.1 if you were to invest $1,000 in this stock today. Now, if you go into the financials, high level, you can see that its revenue has grown from 706 million to about 1 billion USD, which represents a 47.31% 5-year growth. Also, if you take a look at the net income, which sits comfortably at $64.57 million, it has also grown from that amount to $86.3 million, which is simply a 33.61% growth from 2018 to 2022. Also, if I scroll down a little bit more, you can see that its total asset has grown from 3.24 billion to about 4.75 billion USD. So if you take a look at Yahoo Finance to see the statistics of these stocks, including the ratio analysis, we can see from here that it has a value of 3 billion, that's the enterprise value. It also has a profit margin of 8.49% and 16.29% for its operating margin, which reflects that the business is quite profitable. Also, you can see that management has been effective in the way they've used the assets of the business, which you can confirm from the returns on asset of 2.81% and 8.51% for returns on equity generated. Alright, it also has a reasonable cash of 137.76 million, which you can see my mouse hovering over, and a payout ratio of 69.2%. Now, for the fact that this is not up to 100%, it clearly reflects that the business is plowing back some of the profit into the business for growth purposes or other purposes, which will always be communicated through the management discussion and analysis. Also, the exciting thing about this dividend stock is that it has paid dividend over the last 28 years consistently. As such, on a scale of 1 to 5, I'm going to rate this stock a 4, which is a buy for me. So number 3 stock for me is Dow Inc., with the ticker symbol DOW. So Dow Inc., through its subsidiaries, engages in the provision of several material science solutions for packaging, infrastructure, mobility, and consumer applications. So Dow Inc. operates through 3 major segments, which include the following. Number 1 is what I call the packaging and specialty plastics. 2 is industrial intermediate and infrastructure. And 3 is performance materials and coatings. So let's take a look at Google Finance and Yahoo Finance to see what the analysis of these stocks will look like. So as you can see from my screen, Dow Inc. is trading on the New York Stock Exchange at the price of $53.84, and in the last 1 year has grown by 15.98% to its current share price. Now, this business has a market capitalization of 37.85 billion USD and a PE ratio of 22.23 and a dividend yield of 5.20%. So if we scroll all the way down to the high level financials, we can also see that its revenue has grown from $49.6 billion to about $56.9 billion, which is a 14.72% growth in 5 years. On the other hand, the net income has declined slightly by 1.29% from $4.64 billion to about $4.58 billion. Now, when we look at Yahoo Finance, you can also see that the enterprise value sits at $51.23 billion, which is pretty reasonable. And of course, it has reflected a good profit margin of 3.54% and an operating margin of 7.14%. In terms of management effectiveness ratios, we can see that returns on assets and returns on equity are 3.65% and 9.17% respectively. Also, you can see that the total cash sits at a comfortable $3.64 billion, and if you're also looking at the operating cash flow, you can see that it sits at a $5.9 billion. So the dividend payout ratio for this is 114.29%, which means that it is paying a large chunk of its profit to you as the shareholders in form of dividend. So Dow Inc. has successfully paid dividend on a streak of 12 years consistently. On a scale of 1 to 5, I'll rate this stock a 4, which is a buy for me as well. So number 2 stock on my list is what I call Pfizer Inc., which goes with the ticker symbol PFE. So Pfizer is a multinational pharmaceutical and biotechnological company with its headquarters in New York City, United States. So Pfizer Incorporation discovers, develops, and sells biopharmaceutical products across the world. So as of 2022, 42% of the company's revenue came from the United States, 8% of the revenue came from Japan, and 50% came from other parts of the world. So Pfizer stock was a component of the Dow Jones Industrial Average stock market from 2004 to 2020. The company currently ranks 38 on the Fortune 500 and 39th on the Forbes Global 2000. Now, I love this business because they're continually expanding, as they actually set out to launch 19 new products within an 18-month span. And as I speak right now, 11 of those products have been launched at this moment. So Pfizer has other expansionary plans, such as acquisition of a global biotechnological company called Seagen. So let's jump into the analysis of Google Finance and Yahoo Finance regarding this stock. So as you can see, this stock trades at $34.07 on the New York Stock Exchange, which is a 25.98% decline from its price in the last 1 year. It also has a market capitalization of $192.36 billion USD and a PE ratio of 9.0 3.09 and a dividend yield of 4.81%. So when we look at the revenue, it has grown from $40.83 billion in 2018 to about $100.33 billion in 2022, which is about 145% increase from 2018 to 2022. Also, you can see that the net income has grown from $11.15 billion to $31.37 billion. Now, this is equivalent to 181% increase in the last 5 years. Now, it's fair to say that the revenue of this business has grown significantly because of the sales of vaccine in the last 1 to 2 years, the COVID-19 vaccine. Also, when you take a deep dive at the balance sheet of this business, you can see that the total assets has grown from $159.42 billion to about $197.21 billion, which is a significant growth in assets. Of that portion, you can see that $22.73 billion relates to cash and short-term investments. However, you can see that its cash flow has significantly nosedived to $1.52 billion, which I believe significantly was due to investing in a lot of research and development for the COVID-19 vaccines and other related vaccines that have come or become very important in this last 1 to 2 years. So if you look at Yahoo Finance, we can see that the business still has a very strong enterprise value of $212 billion. In terms of the PE ratio, the forward PE is 10.34%, which maybe compared to other stocks shows that there's no much expectation compared to the other stocks that this dividend or this stock will grow extremely much in the long term. However, 10.34 is a fair bargain for an investor. So if you look at the profitability, profit margin sits at a comfortable 27.55%, which shows that the business is highly profitable. And of course, the operating margin is 32.53%. The returns on assets and equity is 7.63% and 23.07% respectively, which shows that management is effectively using the assets that it has used to generate business, which means that management is effectively using the assets to generate revenue for the business. Now, in terms of total cash, you can say 44.79 billion. And most importantly, the dividend payout ratio sits at a 43.09%, which shows that, like I said earlier, there's a high likelihood that the business continues to plow a lot of its funds back into research and development for new medicines and vaccines. Now, I love Pfizer because it has paid dividend over the last 36 years, which shows some level of comfort around consistency. On a scale of 1 to 5, I'm going to rate this stock a 4, which is a buy for me as well. So number 1 on my list is what I call Verizon's Communication. So this stock trades with the ticker symbol VZ. So Verizon is a telecommunication conglomerate founded in 1984 with its headquarters in New York City, United States. So this business basically offers voice, data, video services, and solutions on its network. It operates through 2 major segments, the first being the Verizon Consumer Group and the second being the Verizon Business Group. Now let's get into the detailed analysis of this stock through Google Finance and Yahoo Finance. So this stock trades at $33.79, which is a 15.78% decline from last year, and it trades on the New York Stock Exchange. It currently has a market capitalization of $142 billion USD and a PE ratio of 6.76 and a dividend yield of 7.87%. From its financials, you can see that its revenue has grown from $130.86 billion to about $136.84 billion, which is a slight increase of 4.57% over the 5-year period. Also, the net income has grown from $15.53 billion to about $21.26 billion, which represents a 36.87% increase in its net profit. You can also clearly see from my screen that it has grown its total assets from $264 billion to about $379 billion USD, of which a very small chunk of that portion relates to cash and short-term investment. That's because this is a very capital-intensive business. Now, looking at the statistics and ratio analysis of this stock on Yahoo Finance, we can see that this business has a very strong enterprise value of $315.96 billion. Also, it has a profit margin of 15.58% and 22.73% for its operating margin, which shows high profitability. In terms of how well management has effectively used the assets to convert to revenue, we can see that as 23.39% as a returns on equity, 5.11% as returns on assets. Overall, the business has an operating cash flow of $37.5 billion with a dividend payout ratio of 52.20. Like I said earlier, this reflects that the business is plowing back some of its profits into the business, which I totally understand. It's a capital intensive business, so that might really happen. Finally, I'll say that it has paid dividend over 17 years, which shows some level of consistency for you as a shareholder. Overall, on a scale of 1 to 5, I'm going to rate this business a 4, which is a buy for me. Alright, thanks for taking the time to listen to me. I hope you found this very useful for your own decision making. Remember, this is not financial advice and this is simply for informational purposes. And most importantly, if you don't want to miss any of my valuable videos in subsequent times, ensure to like this video, share with your friends so they can also gain from it, and then subscribe to the channel. And most importantly, hit the notification bell so you don't miss my videos later. Thank you and see you at the next video. Bye.